Good morning, ladies and gentlemen. Just as the markets perk up around 7-month highs, the IPO segment of the primary markets is now buzzing with new offers. Let's discuss about Aegis Vopak Terminals Ltd. We are joined by Mr. Murad Moledina, non-executive director at this IPO company, which is raising about 2,800 crore rupees at a price band of 223 to 235 rupees. The issue will open between May 26th and May 28th, likely to be listed by June 2nd. The company owns and operates storage terminals for liquefied petroleum gas and various other products. They have a presence, I think, in 20 ports across the country. Mr. Moledina, a very good morning and a very warm welcome to you, sir. Tell us what is the reason that you are raising 2,800 crore rupees in this kind of a market? What will these funds be used for?
Thank you very much for having us on your channel, and very pleased to give more information on the upcoming IPO for a primary equity raise of 2,800 crore. Out of 2,800 crore, we will be paying bank borrowings of 2,016 crore, which are outstanding on the books as on date, and thereby the bank borrowings will become zero. We will also pay 671 crore towards Capex that is coming on stream, which is a cryogenic, that is a refrigerated tank to store LPG at Mangalore port. Balance 100 odd crore will be for general corporate purpose.
Okay. My apologies, I missed the size of the debt that you are prepaying.
2,016 crore, 2,016 crores out of 2,800.
Okay, that's wonderful. And this is a fresh offer of share. None of the existing partners are, quitting. This is not an offer for sale. So the entire proceeds will be used for the benefit of Aegis Vopak. Am I right?
Absolutely. It's a primary issue. There is no OFS. The promoters, partners are not selling a single share. In fact, the upper band of 235, which has been fixed, is the same price which the promoters themselves paid 6-7 months back when they subscribed to the equity issue under private placement of 300 crores. So it is the same price of 235 rupees per share.
Okay, perfect. Now, tell us, Mr. Moledina, something about this business. You have presence in 20 ports. What are the kind of customers that you have? I believe these will be very long-term contracts. And what are the margins that you enjoy?
We have 20 working sites, but we are present in 6 ports as of now. It's a necklace of terminals. We put up storage tanks at port to unload, store, and deliver various kinds of liquid products and liquefied petroleum gas. We have customers like national oil companies, Indian corporates, MNCs, and various other users who use our storage terminal. We have around 1.7 million kilolitres of space to store liquid terminals in these 20 sites. And we also have for LPG 5.6 million tons, which we can store and handle at the LPG storage terminals that we have. In addition, we are building 2 very big cryogenic LPG terminal, which will come on stream in H1 this year, which will take my capacity from 5.6 million tons to 15.6 million tons.
Okay. And what is the interest payment so far that you are occurring on a debt of 2,000 crores? I believe once this is paid off completely, this interest saving will go directly to the bottom line.
Exactly. You have said it right. We have around, when we pay back borrowings of 2,016 crore, our average interest cost is 7.8%. So obviously that will no longer be payable. So that's around
So
106 crore a year.
2016 into 7.8%. Yeah, 156 crores is what I get. Let's round
Correct.
it off to 150 crores. So that is
Yes.
going to the bottom line.
Yes.
You've filed a profit after tax of 85 crores for December 2024
Right.
and a revenue of 476 crores.
Right.
What are the annual numbers for FY25?
Oh, those are forward numbers till the board of directors do not approve and it is not published. So that becomes a forward looking statement. But I think a fair indication can come from the 9 months December figure where our revenue rose by 25%, our EBITDA rose by 38%, and our PAT rose by 155%. So that is the growth that has come when we compare 9 months of the current year with the 9 months of the previous year. In the previous year also, our revenue grew by 60% and EBITDA by 75%. So that is the kind of growth that the company is experiencing.
When are these two products coming? When are these two tanks coming on stream? The one that you talk about, cryogenic storage, and the other that being the LPG terminal.
Yeah, so both the terminals, one at Pipavav Port and one at Mangalore Port, both are cryogenic. Cryogenic means refrigerated. They have a temperature inside of minus temperatures, minus 25 degree. So both these terminals which can store
Yes.
LPG at minus temperatures are coming at Pipavav Port and Mangalore Port in H1 of current financial year. So by September 26, as per the contract which is there in the UDRHP, these are likely to be commissioned and operational.
Okay. Uh, when you when you look at your financials, sir, how does Aegis Vopak make money? Is it the storage a percentage of the LPG's price, or is it a fixed contract? What I want to understand is that how will sales grow? You will have to add existing. You will have to add more capacity for storage, or is it something which is linked to LPG price?
Yes. So, how this revenue stream operates is in case of LPG, your tank can store and do throughput 85 times of your physical capacity in a year. So, when you start, you start with, let's say, a 25, 30 turnarounds when you begin. Then every year the volume grows because the demand with the GDP growth also grows, and therefore you will see the revenue increase by way of higher utilization of your tank terminals. Of course, addition of capacity also results in increase of revenue. If you look at liquids, in the liquids, it's all about there is an increase on account of escalation every year. Also, the fact that you can have higher realization by changing mix. You can store more high value products so that you realize more higher storage rates. And also, of course, the third is that you add capacities. Both are not linked to product price. They are fixed rate per month in case of liquid, and in case of LPG per metric ton. So there is no linkage to the commodity price.
Fair point. So the growth of Aegis Vopak will depend upon growing LPG imports. If I'm, just ballpark. That's what I want to understand.
Of course, yes, which is growing in this current year. LPG imports grew by 15%, and historically it's always been around 10% year on year.
Okay. And I was looking through your website. I found out that apart from terminals, you're also involved in logistics of the products that you store. What is the percentage contribution of logistics to the overall revenue?
So, logistics, or if I understand correctly, you're referring to distribution that is being done by my parent, which is Aegis Logistics Limited.
Yes.
Aegis Vopak Terminals Limited only does terminaling and nothing else. So, it is only involved in storage.
Okay.
It is not involved in trucking. It is not involved in buying and selling product. It is only offering storage facilities to customer at a fee.
Okay. Overall, how many customers do you have at this point of time? This is not an area that is showing growth. I'm sure these customers have been there from the very beginning, and more or less, this is a segment which you already address.
Yes, I can tell you we have very strong customer relationships. My partner has been doing this business globally for last 400 years. Aegis as a group has been doing this business since 1978. 90% plus of my customers are repeat, and around 47% of them are storing at more than one terminal which I own. So we have got a very strong base of customers, and they are a number of them, because we can change products. Our infrastructure is flexible to store many products, and therefore there are different customers for different products. So you have a range of customers to whom you serve.
Okay. So, when you look at future capacity expansion, for the 6 points of presence that you have as of now, what is the utilization of your tank farm?
Oh, in case of liquid, we always count the utilization in terms of what is your realization per kiloliter of storage space that you have. And you can see generally in my DRHP that per capacity of kiloliters that we have, the realizations are around 3,000 rupees plus annually. So that is how we continue doing that. And as the product mix will change and we will store higher value product, this realization rate will see an increase. So it's also based on the capacity that you have. In case of LPG, you would have seen that there is a consistent growth. And I said the country is also experiencing a 10% on an average import growth. And the current year it was almost 15%. And we follow suit. We also are seeing a similar kind of growth in terms of LPG volume, and the rate is always on how much quantity that you handle in case of LPG.
Uh, Mr. Modelina, who are your competitors in this space?
There are a lot of tank terminals in the unorganized sector. So, as a national player in liquid and LPG, there are very few players. It's a very niche business, a business of micromanagement. It's a business of sweat. It is not a plug and play business. It's a business where you require full attention to function and a certain skill set. We have a partner who's a triple A ESG by MSCI. We ourselves are double A ESG company. So, a lot of technical expertise is needed in this business, because you have to handle number of products which all have different characteristics, and they all need a different set of care. So it's a very, very skillful business, and it's not a run of the mill kind of a business where plug and play, that you just invest money and do the business. It requires a lot of technical expertise.
Okay. Mr. Moledina, what was the EBITDA margin that you enjoyed in the 9-month reported number, and what was the full number in the year ago period?
So we had a EBITDA margin over revenue of 74% in 9 months of December 24. So operating expenses were only 26%. In the last year, we did a EBITDA margin of 71%, having a 29% operating expenses. So there has been an increase as far as the percentage of EBITDA over revenue in the current year.
Okay. Muradji, the very best to you as far as the success of the IPO is concerned. Let's hope you get a stellar listing, and that this prepayment of debt as well as cut down in interest works very well for Aegis Vopak. Thank you for your time, and health wishing you all the best. That, ladies and gentlemen, was Mr. Murad Moledina, Non-Executive Director for Aegis Vopak Terminals, a company that has come up with a 2,800 crore rupee IPO, priced at anywhere between 223 to 235 rupees a share. The money which is being raised will go into paying off debt of 2016 crores, and of course 671 crores for Capex to set up a cryogenic farm, and about 100 crore rupees for other working capital requirements. It's a rare company which is not making an offer for sale, but utilizing whatever money comes from IPOs towards improving the overall performance of its balance sheet. Continue watching Business Today Television. There's a lot that's happening on the other side of this break.
If you like the video, do like, comment, share and subscribe. If you like the video, do like, comment, share and subscribe.